What are the tax benefits of an S-Corp? Well, today I'm gonna answer that question and more. But spoiler alert, we recently saved our client over $95,000 in taxes by making one small change. You guessed it, switching her from an LLC to an S-Corp. And if you're still being taxed, let's say as an LLC instead of an S-Corp, you may be giving Uncle Sam a bit more than you have to. So if you wanna know more about how S-Corps work and all of the S-Corp tax benefits that put money back in your pocket, you're in the right place. Now, I have to warn you that even with all of the benefits that S-Corp provides, they're not the right choice for everyone. So make sure you watch until the end of this video because I'll be touching on what factors determine if an S-Corp is right for you. One more thing, the information in this video is solely for educational purposes. So you're gonna wanna consult with your specific tax advisor or legal advisor for your specific business. Okay, ready to talk S-Corps? Let's go. Hey, I'm Karan from Life Accounting, where we help businesses increase profit and decrease taxes via smart accounting and bookkeeping. So we're not gonna waste any more time and we're jumping right into the benefits. But here's something I want you to remember. An S corporation status is a tax designation and you can't incorporate an S corp, but you can elect to be taxed as one. All right, tax benefit number one, employment tax savings. You see, owners of S corporations get to receive both the salary and dividend payments, aka distributions from earnings of profit. Now, this is a huge deal, and let's unpack why. With an S corp, you only pay self-employment taxes, which is 15.3% currently on the salary paid to the owners. All right, well, why is that important? Well, remember, owners of S corporations get to take both the salary and dividend payments. While your salary is subject to self-employment tax, your dividends are safe from self-employment tax. So Karan, you're telling me I could pay myself only $1 that's subject to self-employment tax and then pay the rest in dividends? Not quite. You see, the IRS is hip to such thinking and requires that your salary is reasonable and aligns with your actual responsibilities of the business. Now, the easiest way to figure out what is reasonable is to use comparable salaries for your job position. So, as an example, if you're a doctor that owns a practice and most doctors in your area make $100,000, then it wouldn't be reasonable to pay yourself only $30,000. Other factors that determine a reasonable salary are experience level, comparable salary, geographic location, and economic conditions. Even if you can't get away with paying yourself $1 in salary, the tax savings can still be tremendous. Let's look at an example and truly paint a picture of how switching to an S corp and changing how you receive income can lead to massive tax savings. Say you're a customer support rep for your company and you make an income of $100,000 in gross earnings. If you choose to be an LLC taxed as a normal partnership, your entire $100K would be taxed at the self-employment rate of 15.3%. Before taking out federal and state taxes, you're left with $84,700. But if you were to elect to be taxed as an S corporation and took a salary of $40,000 and the rest in distributions, only the $40K in salary would be subject to self-employment taxes, leaving you with $93,880 before taking out federal and state taxes, or $9,180 more in your pocket, simply because you chose to be taxed as an S corporation. Not bad, right? Note that that's $9,180 more in income, even after you take out federal and state income taxes. In short, S corps can greatly reduce your self-employment tax obligation by only paying self-employment tax based on your salary and not the total business income. All right, if you made it this far, go ahead and like this video right now to let me know you are enjoying it. And as a bonus, it helps others find this video on YouTube, so it's greatly appreciated. Also, don't forget to subscribe so you don't miss one of our videos that can help you increase your profit and pay less in taxes. All right, tax benefit number 2 is pass-through income. As an owner of an S corporation, business income, credits, and losses get passed through to owners instead of being taxed at both the corporate level and at the shareholder level, essentially avoiding the double taxation that C corporations are subject to. This is similar to an LLC. Now, speaking of losses, if your S Corp loses money, those losses are then deductible on your personal income returns. So, for an example, if you are the sole owner of an S Corp and the business suffered a loss of $10,000, you'll be able to take a $10,000 deduction on your tax return, meaning that loss can offset any other income that you have received. All right, tax benefit number 3, low risk of audit. Since 2010, S Corp audits have dropped over 34%. According to the IRS, audits for S Corps in 2018 were 0.22%. To put it into perspective, that is 1 in every 459 S Corps that are audited, which is extremely low. And the extra benefit of S Corps, asset protection. One other benefit of an S corporation to be aware of is that S Corps provide owners limited liability protection, just like an LLC would. This means that an owner's personal assets, such as homes, cars, and cash, are protected against lawsuits, for example. All right, so how do you know if S Corp status is right for you and your business? You're gonna wanna answer these 3 questions. Number 1, do I make enough profit for S Corp status to be beneficial? If after paying yourself a reasonable salary, you have only $2,000 to pay yourself as a distribution, it's likely not worth the added effort and extra paperwork to be treated as an S Corp. Remember, the biggest benefit of an S Corp is the ability to not pay self-employment taxes on your distributions. If you have minimal distributions, then you won't receive major benefit. Question number 2, do I plan to withdraw most of the profit from my business? If you plan to take most of your profits as a distribution, then S Corp status might be right for you. Alternatively, if you plan to reinvest most of your profits back into your business, leaving very minimal profit, S Corp status likely does not make sense. Question number 3, does my state recognize S Corps? You see, S Corps aren't treated equally by every state. States such as New Hampshire, Tennessee, and Texas ignore S corporation status and tax them as C corporations. With that said, you will want to check with your CPA or tax professional to determine if S corporation status is for you. Now, if after answering those 2 questions, you decide to elect to be taxed as an S Corp, here's how to do it. First, let's look at the S Corp eligibility requirements. There must be a maximum of 100 shareholders. It must be a US company. The shareholders must be US residents, and there can only be 1 class of stock. If you meet the eligibility criteria, here's how to elect to be an S Corp. If you're electing S Corp status as the LLC, you will need to file Form 8832 Entity Classification Election with the IRS by March 15th for it to take effect in the current year. If you're electing S Corp status as a C corporation, you must submit Form 2553 Election by Small Business Corporation to the IRS by March 15th for it to take effect in the current tax year. Okay, so those are the major tax benefits of an S Corp. Here are the major points to remember. S corporation status is a tax designation, so you can't incorporate as an S Corp, but you can elect to be taxed as one. S Corps only pay self-employment taxes on salaries paid to the owners, not the dividends or distributions. Business income, credits, and losses gets passed through to the owners of an S Corp. S Corps have a very low chance being audited by the IRS. I hope you found this video useful and interesting. If you did, please go ahead and like this video and comment below if I did a good job explaining it. Also, don't forget to subscribe to our channel so you don't miss out on videos we're putting out to help you grow and manage your business. I'm Karan from Life Accounting. Until next time.